right, I guess we'll get started. Hello, everybody. More people are joining as we speak, but that's okay. My name is Beth Pinkley Johnson, and I am the managing partner of Flynn Family Lending, as well as Lend to Live Management. And we wanted to have a webinar today talking about some creative financing solutions with Flynn Family Lending. There's been a lot of chatter on social media about the types of creative financing that we do, especially in a high interest, low profit margin, low transaction environment like we're in today. It becomes increasingly more important to be able to find the right financing and work with creative partners like us at Flynn Family Lending to be able to help you acquire more properties and get across the finish line. So what we would like to do today is introduce our team and our core lending capabilities. But really what we'd like to do is turn it over to some of our existing clients and let them speak for themselves on some of the ways in which they utilized Flynn Family Lending to help them on their recent projects. So without further ado, we will get started. Launch into this. Again, just a little bit about myself. I started Flynn Family Lending with my husband, Matt Flynn, our namesake, 10 years ago this year. So we're really excited. The reason we started this, just to give you a little bit of background, was because Matt, as a seasoned real estate investor and a mortgage broker, found that there were just a lot of restrictions in the way that real estate investors could finance their deals. And he wanted to overcome that because he felt like institutionally financed deals really left a lot to be desired, and that there was a more creative, flexible approach to how real estate investors could fund their deals. So we started that in Washington State. We've slowly grown that over time and are now expanding into a few different markets across the country on an exception or case-by-case basis, but we wanted to showcase some of those deals here with you today. We do have a new member that joined our team. Some of you may know him already. His name is Nee Lee, and I'll let him speak a little bit more about himself and what he does a little bit later. But Nee came to us after working in the real estate financing space for 5 years already, and as a seasoned real estate investor himself. And we're really excited to have him on board. He will be your first stop for when you have loan inquiries or projects that you want to run by us to see how we could creatively finance those for you. Nee is your guy. So there in the lower left, right-hand corner is his contact information. I encourage you to snap a screenshot of that QR code so that you can get in touch with him. But we're really excited to have him on board. And while I don't like to launch immediately into what our loan guidelines are, I do really feel like a lot of people come to us and ask this of us right out of the gate. So if you want to know a little bit about our loan guidelines, again, I take a screenshot of it or whatever. I'm not going to talk about it ad nauseum because I think really what's the most important thing is at Flynn Family Lending, we try to be fair in our pricing, but more than anything else, we try to do things differently. We want to make sure that we're helping right fit a loan opportunity for you based on your individual project needs. And no two deals are exactly the same. So while we pride ourselves on creativity and flexibility, we do have some standard loan guidelines out there just to give you a ballpark of what our rates and terms might be. But again, it's not really about the rates and terms themselves. It's ensuring that you can find the right lender to finance a particular deal or project that makes sense for you. And so what you're going to hear about from some of the gentlemen on the call today is that we helped them finance deals 100% loan to purchase. We helped finance deals by cross-collateralizing additional properties that they already owned. We can do some things that are much more creative than other hard money lenders or conventional lenders can provide you. And so that's what we want to focus on today. So aside from the loan guidelines, I think what's really important to understand is the Flynn family difference. And what makes this different is talking about the creative financing side of things. We do things like second deeds of trust. So we'll go behind your low interest bank 30-year mortgage and allow you to tap into the equity into a property without having to rewrite that low interest existing first lien. We can cross-collateralize properties so that you can come to the funding table with less money out of pocket. And we will give you credit when you find an off-market property with a lot of walk-in equity. You'll hear from Patrick Choi and his partner, Jesse Lee, on the call today. Oh, Jesse's on vacation, but you'll hear from Patrick. They are doing a lot of direct mailing out there and coming across a lot of properties out there with some significant equity. We give them credit for that walk-in equity. The other thing we like to do is be flexible. We know that some deals, some off-market deals, some wholesale deals have some fairly significant assignment fees. To us, that does not matter. Some hard money lenders might cap you at 5, 10, or 20% of the total purchase price. We don't. I think the largest assignment fee that we've ever funded was well over $500,000. But to us, we look at the overall project pro forma, and if it pencils out and there's enough margin for the borrower and there's a healthy profit margin to be made on it, we don't care if there's a large assignment fee. We also do seller financed deals, whether that's in first position or second position. We are allowing sellers to carry back so that you can have less money out of pocket as well. And you'll hear a little bit more about that later. And then we also try to be really simple in the way that we do things. Now, simple doesn't always mean easy. I think there's a difference to that. Simple means we want to be able to close quickly. We're hyper local, so we can do valuations in-house. We're not going to always require a BPO or a third-party appraisal. We're not always going to require credit or income proof and verifications. However, there might be some times when we do. If you're finding an extremely good deal off market, but you don't have enough for, let's say, rehab, we might want to know, where your income comes from. So there may be some times where we'll ask that, but it's all in the way that we package up the loan. If we're financing 100% loan to purchase price and the rehab, we might have a little bit more qualifiers in place as well. But again, we try to keep things really simple. We want to provide creative financing solutions that are offered by other hard money lenders that are backed by institutional capital that have more constraints on them. And we want to be really flexible. So again, we don't like publishing our loan guidelines because a lot of it, as we like to say in the private lending world, is it depends. And so you'll see us trying to customize our loan rates and terms to your particular project, to your particular needs. And so with that, I'm just going to turn it over to Nee to explain a little bit more about our seconds and our cross-collateralizations before we move into our guest speakers.
Thanks, Beth. These two topics that Beth mentioned are some of the more common ways that we've been doing things creatively, and I think you'll see it across the board in the upcoming presentations from our borrowers. But the second liens, I think most people know what second liens are, right? Typically, you have a first mortgage, typically a conventional mortgage, very low rate. If you got anything in less 3 years ago, right, you're getting a rate in the 2s, 3s, and 4s oftentimes, and you never want to let that go. That's a generational rate, right? We don't know we're going to get those rates again. And for us, we want to support that. We don't want you to have to pay off those loans in order to pull cash out. And so we can put a second lien on those stable rental properties, right? And help you pull out cash so that you can infuse it on another project, do renovations, support a business. And so I like to look at the blended rate. Obviously you saw our terms. If you have let's say you have a first mortgage for $500,000, right? And you're cashing out $200,000 and a second at say 13%. Now that second mortgage sounds high, but if you look at the blended rate, that's essentially a 5.9% loan on a $700,000 loan balance, right? Which is still lower than you're going to get if you refinance the entire thing. So that's why this is beneficial. And you still get to keep that first mortgage once you pay off the second lien. We typically like to go behind stabilized 30-year mortgages instead of hard money. And some of the nice things is that sometimes we can go in third as well behind a HELOC, but on a case-by-case basis. But the biggest thing about the second mortgage is that we want to make sure that no matter what loans you do with us, right, is that you have a solid exit strategy, because it is hard to refinance out of second liens, right? And so wherever you're putting those funds, we want to make sure that if you're putting in funds towards a purchase, then that purchase can whatever you're planning to do there, whether it be refinancing or purchasing, or selling that flip, we want to make sure all of that can pay off the second lien, right? Um, on the next one, I want to talk about the next one, cross-collateralization, because it goes hand in hand. So typically, cross-collateralization just means that you're using multiple properties to provide a single loan, right? And if you're buying another property, usually there's a down payment involved. But if you have equity from a rental or another property, we can put them together so that you can have 100% financing, or sometimes more on this purchase, right? Or if you have multiple properties and you just want to pull out cash and you want to do it all in second lien position, we can bundle them all together. Let's say three rental properties to get you a $500,000 loan, right? Again, that's cross-collateralization, and we can do that as well. The one thing I wanted to mention is that a lot of times, when you're buying something, real estate investors, we all know there's this rule about cash out refinances, right? There's always seasoning involved with cash out refinances. And so oftentimes you want to up that loan balance on your purchase so that you can do what we call rate and term refinance, which means that it's a loan, you don't have to have any seasoning on it. It's a loan to pay off an existing loan. In this case, maybe 100% financing. There's lower rates, there's higher LTVs off of that. And that's one of the nice tricks of setting up this cross-collateralization loan so that you can do the refinance later. So a lot of these things are, we always talk about exit strategy. We help you structure in a way that makes it work for that future loan. So they always say, if you're doing a BRRRR, right, you start with the end in mind. One of the nice things
For
about,
me,
yeah.
oh, just wanted to let people know, since they probably aren't aware, you actually started off as a friend and a colleague, but then you
Right.
became a borrower of ours too. So why don't you tell the
I was
group a
just
little
about to
bit
mention
more
that.
about your background and then
Yeah.
how you utilized some of these strategies for
So,
yourself?
so both of these strategies are what made me a client of Flynn Family Lending before I became part of the team. So back in 2020, during COVID, there was a deal I found in Texas, and it was a portfolio, right, of a triplex, a fourplex, and a sixplex. And back then during COVID, lenders were not funding. Most of them were not funding at all. My typical lenders that I would normally use were out of the picture, and Flynn Family was there. And again, I wanted to buy this with 100% financing so that I can do some of the refinances that I wanted to do without having to involve seasoning. And so what they did was, they put a lien obviously on the properties that I were buying in Texas. They also cross-collateralized it with some of the properties I own in a couple of properties I own in Washington State in second lien position. And I came to the table with no money down. I actually think you actually gave me cash at the closing table because there was enough equity in the Washington properties. And again, no one could have even done this, lent at all during COVID, but the fact that they gave me 100% financing during COVID was amazing. And in the back of my head, I'm like, I'm gonna just watch how they're doing. Maybe we'll reconnect in a different way later on. And so after many meals together over several years, and it just made sense. I mean, what I like, my past life, I've borrowed from a lot of different hard money lenders, a couple dozen of them. I've worked for a nationwide one for the past 6 years. I know what everyone can do at this point, and it's nice to be able to walk into a room because often these days you go to an event, there's like 15 other hard money lenders there, and say we can do something completely different than everyone else, right? Side note, I got a free T-shirt yesterday from Reeves, and this is what we're all about, just being creative. And I love it.
I think you also had a large assignment fee on your deals too.
Yeah. Uh, on that one, it was, I think, the assignment fee was about 96% of the purchase price. So something else that most other hard money lenders can't touch. I think most hard money lenders can finance somewhere between 0 or 20% of the assignment fee. And if you don't know what that means, basically, if you have a $100,000 purchase price, a lender would say if they only finance 10% in assignment fee, they'll finance $10,000 in assignment fee towards that loan, right? In this case, I think I was like a $80,000 purchase price with an $80,000 assignment fee on that one property. So
There were some pretty low purchase prices and you needed some fairly extensive rehab. So I think we did give you some money back for that too, but it seemed to make sense for us at the time. And you were very responsive and kind of checked all the boxes that we need for, an experienced borrower with good projects, good financials, and had all your ducks in a row too. So that was great.
Yeah, I
Thanks,
think it's your first
me.
time in lending in Texas, right? And now it's like our second favorite
It
state.
was. Yep. All right, so we'll move on. Thank you, Nee. Appreciate it. And we'll go back and make sure that you guys have access to his contact information again at the end of the call. If you want to connect with him, he's a wealth of information. But next up, we have Garrett Terrell. Some of you may know him. He used to live in Washington State, and then he defected, like many other Washingtonians who wanted to get out and go to one of the Sun Belt states. And he recently came to us, I believe, at the end of last year to work on a pretty exciting deal in another state. And so I will turn it over to Garrett to introduce himself and the project we help him fund.
Yeah, thanks, Beth, for having me on. Appreciate you guys. Yeah, so this is a pretty cool deal, you guys. I originally was an agent and a fix and flipper in Washington. My wife and I moved to Phoenix, Arizona about a year ago, and quickly started investing here and kind of wanted to transition out of the single family game into multifamily. Stumbled upon mobile home parks and basically brought this deal to Beth and Flynn Family Lending. And it was a fantastic mobile home park deal actually in Montgomery, Alabama. And it was a very interesting deal. And one of the benefits, I think, with working with Flynn is I kind of brought the deal to them and said, here's what it is. What are your guys' ideas? And originally I was planning on going through an SBA loan, but once we ran the numbers and kind of put together a good scenario for this, it actually made sense to cross-collateralize a duplex that I had in Olympia. And basically it was such a good deal that we actually did 100% financing on this mobile home park. And it was a 33 unit mobile home park, insanely good cash flowing deal. It was an interesting situation with the seller. She had owned it for 25 years. She was retiring, getting out of the business, and was selling it at an extreme discount. And so we had to come in with Flynn and get the job done. And basically, we got an independent appraisal done on the property and actually appraised at 2.04 million. And my purchase price was 1.1 million. So with that large of equity in there from day one, Beth and Flynn was comfortable with lending it at 100% loan to cost, basically. And I was happy to do it because I didn't have to come to the closing table with much cash. I think it was less than $20,000 in cash and bought a, $1.1 million deal. And just actually as of recently, held that for about 6 months, 6 or 7 months, and actually just came in with a new lender and cashed them out. And so I'm happy because I was able to buy the property with relatively low capital. And obviously they're happy because they got their money back within 6 or 7 months. And now I'm just excited and trying to find the next one of these.
One of the things that I liked about this whole project, Garrett, was the fact that even though you knew you were walking into a really solid deal, I mean, you found this off market, you really nurtured that relationship with the seller. You guys developed a really solid rapport together. You went out and went that next step and actually ordered an independent appraisal just to verify and make sure, both from a market sales approach as well as an income approach, current and pro forma, that you were walking into a solid deal and that you knew how much equity that you were walking into. And while you may not be able to assign that over since you ordered it yourself and it wasn't through a lender, I really appreciated the added due diligence because, commercial appraisals aren't cheap, but it really said a lot to us as a lender that you were working all the numbers. This is a remote project. It's out of state for you. You went and visited there a couple of times before you actually went under contract. You took lots of pictures. And as soon as we started our engagement of this loan request, you were sending me documents immediately, including that appraisal. So I just really wanted to call that out. This was our first foray into Alabama. There was a lot of redeeming qualities about it in that Garrett also worked with the seller to have her be the project or the property management team there for a minimum of 6 months while he got his bearings. It helped him transition seamlessly. And because there were a lot of park-owned mobiles on there, then he had some additional assets to help secure his loan. But one thing that throughout the process, Garrett was providing, a quote for some of his hazard insurance, and he was going with the same insurance provider as his seller. He actually allowed me to come in and counsel him on obtaining a much stronger policy. And because he was taking a much larger liability, I mean, our loan for him was in the seven figures, and his seller owned it outright. So she had owned this for quite some time. If a natural disaster were to come in, she would still not owe any money to anyone other than herself. She had a very small loan on there. So even though it added significantly to your cost, right, Garrett, you were still amenable to my suggestion that maybe you up your insurance amount just out of protection for yourself and your property. And it's that kind of working relationship that you get with Flynn, knowing that you're working with some seasoned real estate investors, and being able to take that counsel and guidance too, that can help further shore your deals out.
Yes, 100%.
If there's Cool. So, and then that even transpired, for some future deals that you and I were talking about, and maybe holding off on those and really working and shoring this up. So we're really excited that you got out of this loan. It means I now have some money to lend out because a significant amount of money came back to us last week. So we're excited for you. And if there's any questions for Garrett about his deal, you can send them in chat, or you can raise your hand and we can ask him now before we move on to our next guest. All right, Garrett, thank you so much. We're going to turn it over next to Patrick Choi. And we've done a number of deals with Patrick and his partner, Jesse Lee, lately. And interestingly enough, although Patrick was on this side, I think it's funny because Jesse would call me each and every single year asking what my rates and terms were, asking me to match a national hard money lender if I could come down to mid-single digits and lower my points. And each and every time I told him very respectfully, no. And the reason is because we could provide things that are much different. We provide a very high touch, a very creative approach to lending that some of these national hard money lenders can't provide. And so we were going to stick firm and understand that our value comes in the creative approach that we provide to your deals, not in a lowered rate. We aren't necessarily Walmart. We like to take, a Nordstrom or Four Seasons kind of approach to our financing for you guys. And so we were able to finally get Jesse and Patrick into the fold. And now we have them literally in our office space sharing with us. But the most recent deal that we helped support them had some pretty cool features to it. So I will turn it over to Patrick to share with you about one of his most recent acquisitions.
Yeah, thank you. So my name is Patrick Choi. I don't know, I guess you can call myself a real estate entrepreneur, I suppose. And I can't really talk about the fourplex without also talking about a condo acquisition that happened at the same time. I'm generally not a fan of condos because they're very hard to cash flow on, but if you are going to buy a condo, it was going to be this particular one in West Seattle. It had an unobstructed view of downtown Seattle. The seller was willing to seller finance 90% of the purchase, 15-year term, 5% interest only payments, and the debt was also movable. And so I'll maybe get back to that here in just a second. On that type of purchase, finding 10% down or $50,000 is fairly easy. But at the same time, we were also looking at this fourplex, and the seller was willing to seller finance about it was $475 and subordinate into second position. And for us to be able to close on this, finding $400,000 is now a little bit more difficult. And so taking into consideration the core capabilities of Flynn Family Lending and Beth, this is actually really important because the structured finance aspect of all of our deals is incredibly important. And most lenders out there, or at least I haven't found another one out there, that can actually fund a deal with subordinate financing. And that becomes really important for us because the way that we've structured our seller finance terms, we have the ability to substitute the collateral. And so on this fourplex, and as well as the condo acquisition that we just got, I actually don't really care about the real estate that much. And what I really care about is the debt. And so someday, even in the near future, I have the option of being able to sell both of these properties and now having an infusion of almost $1 million in cash that I can go take somewhere else, because my notes don't have a requirement to get paid off, provided that I can secure that note to another piece of real property that has equity and cash flow. So that's a really big deal for us. And that type of structured financing, I don't want it to go to waste. And being able to partner with someone like Beth and to be able to get a deal like this done was incredibly important. Because Flynn was going to be in first position on this one, we were able to get more money than we needed than our down payment. We were also able to get a little bit of money to use for rehab. We had a little bit of extra cash to put into our reserves. And actually, we had a little bit of money left over to be able to close on that condo as well. So it was kind of a 2-for-1 deal for us. And this is why we like working with Flynn.
Awesome. So again, it was a second lien seller carryback. There have been times when, my husband, Matt Flynn, has been able to work with borrowers or prospective borrowers to negotiate with the seller to go into second. In this particular situation, Patrick was able to negotiate that with the seller themselves. And so we were able to come into a healthy first lien position, but allow that seller carryback. Like he said, there's not a lot of lenders that will do that. Well, it will still require you to come in with a minimum of 5 or 10 or 15% down. And we don't necessarily require that. So it was a great project and or I guess great terms, right? And I'll just do a little bit of plug for Patrick and Jesse. If you are local to Western Washington, they do have a program called Walls and Wallets, where they teach you all about how to do creative financing, deal structuring, off-market deals, wholesaling, the whole gamut. They really work with their students for a significant length of time and have helped them become very successful in these same kind of tactics. So if you're interested in learning a little bit about substitutional collateral and how to negotiate with sellers, these guys are top-notch. And again, if there's any questions for any of our guest speakers, you can put them in a chat or just raise your hand, and then Melanie, our coordinator, can let us know if you want to speak up. Thank you so much, Patrick. I appreciate that.
Thanks.
So we do have a question in the chat. What states do you lend in?
He just posted there. Most of our deals are currently in Washington State. One of the reasons that we wanted to bring Neely and his expertise in financing as well as real estate into the fold at Flynn Family is because we do keep hearing that there's a need to offer our creative financing solutions across the country. And we don't want to veer away from the high touch hyper local capabilities that we've had here. And so we've looked to expand into other markets very carefully. So far, we've done Alabama, Arizona, Oregon, Texas. We had done some in the past in California and Florida and Nevada. So we're going to do it on a case-by-case basis. We want to make sure that we have the right team in place locally to help us execute your loan and your financing the same way we would here. But again, if you come with us with a great deal like Garrett did, and he had an appraisal in hand, and we did some quick research on the property and the location itself. It wasn't in a flood zone. It wasn't near water or anything. It was literally right outside of a military base with high occupancy and tenancy opportunity there, then it just makes sense to us right out of the gate. So we're going to go in states that don't require a licensure requirement. And so that's where we're going to work with right now. So any other questions?
Someone asked who provides those classes. Patrick, did you want to talk a little bit about those classes?
Yeah, we teach a class. We're kind of in the middle of one right now, so it's called Walls and Wallets. I'll go ahead and put my contact information in the chat, and so you could reach out to me personally, and we can talk about it and see if it's a good fit for you.
Perfect. Thank you so much.
And we did have one more question before we move on. Is there any license requirements out of state to allow time for? Alyssa, what was that referring to?
Yeah, I'm not sure I understand if that's for the borrower side or as a lender. I think, well, if it's to clarify for a lender, where there are certain states across the country that require licensure for uh, consumer or business purpose loans. And so there are some like Oregon, California, Idaho, Nevada, Arizona, the Dakotas, Vermont, Virginia, Florida. So all of those have some form of licensure requirement. Some have carve outs, whether it's residential versus commercial. So there are certain states that we just do not lend in, and those would be some of those licensure states, New York, New Jersey, and stuff like that. So I think the best thing is if you do have a good deal, then you can reach out to me and talk about whether or not that makes sense to us. But when we do go outside of Washington, we're looking at going into some major metropolitan areas and not necessarily into rural locations. So the next up we have Bob Thomas. He is from Oregon, and we did a mixed use cash out for him. So I'll turn it over to him to share a little bit about his request and his project to share with you.
You're missing the check on the cross-collateralization as well.
Oh, I forgot we did too. Good point.
Sure,
Thank you.
sure did. So this deal, I run a kind of value add commercial real estate investing company, mostly based in Portland, Oregon. I've done a lot of work with Beth and Matt for, God, I don't even know, 10, I don't know, 7
Years.
years now. Yeah, years now. But on the lending side, on the investing side, I bought this mixed use property. It's about 12,000 feet of retail, 17 apartment units above it. We got it for a really strong deal, about $3 million, worth as is around 5. And our plan was to vacate all 17 apartment units and do a full rehab upstairs. It was going to cost about $1 million. We got seller financing on the property, really attractive seller financing, about 80% LTV, 425 interest only for 5 years. And the seller's actually leasing back part of the space. So every month she pays me 15 grand in rent for her piece of the commercial, and I pay her $8,700 a month for the mortgage. So definitely not a loan that I wanted to give up. There were some considerations around how to fund the $1 million rehab. I do a lot of syndication work, so we were thinking about doing syndications. There were some 1031 considerations, so potentially a convertible note. But after running the numbers and talking to Beth, I said, hey, it might just make sense to get a commercial second if you guys can do it. We looked at the numbers, and the numbers looked fine as is, but I wanted to get going and didn't really have time for an appraisal. And they said, well, do you have anything else to collateralize the loan with? And I had a vacant retail building. We were mid-leasing up, had just bought it for about $1 million. And I said, how about this? And they agreed to it. The numbers all worked. Right now, they've got a screaming deal on the loan because we have subsequently leased the retail building up, and that $1 million of collateral is now worth probably $3 million. We're finished with the rehab on this project, so this property is probably worth $6 to $7 million. And they're sitting at a, I don't know, $3 to $3.5 million slug on their loan, so they're sitting at a good position, but really easy to work with. I mean, this was like a phone call. I sent them a spreadsheet that probably was way over the top, but that's how I do spreadsheets. I said, look, the numbers are great here. And then it was, I don't know, a week later, maybe 2 weeks, we funded the loan. And it's just been really smooth sailing ever since. We did it in a couple of draws, just sent some pictures in and got the second draw on it. Yeah, I've been super happy with everything. I would, Beth, you don't know this, but when we pay off the loan, I'm just going to ask you to put it right back on again.
Sounds good.
So
No,
yeah,
we need that extra
highly
piece of
recommend. I love
collateral
working with you
anymore.
guys. I highly recommend. I love working with you guys. So that was great.
Awesome. One thing we loved about this deal is I couldn't believe you have to tell people how the heck do you buy this on seller financing and your flagship tenant's rent is more than the payment that you make to her on your seller note.
It's a
phenomenal.
combination of really aggressive negotiating and kind of negotiating the lease backs separately from the purchase, and it all just kind of came together. We found some potential structural issues during diligence that might have been like very material. They ended up not being significant, but we used those to basically say, hey, I mean, it's an unreinforced masonry building, and we found some potential structural issues that would have disallowed bank financing. And so we said, look, the only way for you to sell this thing to anyone is to sell or carry it. And we separately negotiated the lease back. And when we got some discounts on the purchase price, an 80% loan ended up being $8,700 a month. And she literally rents 2/3 of the downstairs, and she gives us a $15,000 check. It's a little more now because it's escalated, but every month. And then we've got the 17 apartment units and one other retail space that are also mid-leasing or paying already. So anyway, it was a screaming deal, but you guys made it way better with the financing.
So where do you stand with all those 17 units?
We're done with them. We're leased up on 3 right now, and we've got like applications in another 5 units. So we're good. I mean, the building looks way different now. It's all painted and nice. The units interiors are just dialed, all air conditioned, and yeah, I mean, they're great.
Fantastic. I think I should point out, so we missed that cross-collateralization check, but you did give us 2 commercial properties in second lien position on both of them.
Mhm.
And it's not like we necessarily need it. We were still sitting at a pretty healthy loan to value. We like to stay pretty conservative. So while we're going to do seconds, which is kind of known out there for being, a little bit scarier, a little bit more high risk, we're going to keep our loan to values fairly conservative so that we have a healthy equity buffer to protect us on the lender side. We didn't necessarily need that extra piece of collateral, but it was always just a good faith to allow us to do that. Since we were doing a fairly significant amount of rehab across all the resi units, we just wanted to make sure that we were, had a little extra protection. And this was at this
And
time
we
our
went
first
fast and
loan
didn't
with
get
you,
an
right,
appraisal.
Bob?
We went fast and didn't
Yeah.
get an appraisal, right? I mean, you were like, look, get an appraisal and it's fine. I was like, I don't want to wait a month. We got to do the rehab. So it was a really easy process. And once we got the piece of cross collateral leased up, I mean, that added $2 million to the valuation like overnight. So it became you guys are very well overly collateralized on this deal right now.
Oh, 100%. You were allowing us to do that, so we were appreciative of it. But how much, we saved you a lot of time, probably 6 to 8 weeks, and about how much money, on a commercial appraisal to get that done so that you could, start work.
Yeah,
Quite a
and I mean,
bit.
from a cost perspective, right? I was looking at, look, do I give up equity in the project? Do I have a convertible note? There's going to be a lot of securities attorneys involved and everything else versus, I think we're in the upper 12s on rate. And 3 points, it was something like that. Anyway, it was very reasonable when looking at my alternative, capital cost of some form of like super creative syndicated equity structure.
Perfect. Awesome. Well, if there's any questions for Bob, go ahead and throw them in a chat or raise your hand. And if not, we will move over to our next one. Thank you so much, Bob. I really appreciate it.
Got it. I'm gonna have to drop, but yes, great seeing you.
You bet. All right, next we have Derrick and Dexter, and we did a flip for them in the Wallingford area of Seattle. So I will turn it over to the 2 of you to talk about your deal.
All right, so yeah, we found this one off market from a wholesaler. So there was an assignment fee on this one, and Flynn was able to finance the assignment fee included in this one. We found this one at a great deal, even though there was an assignment fee on it, and it was enough day one walk-in equity that we were able to use another property that I have, a duplex, and cross-collateralize that, and we're able to get 100% financing from Flynn to walk.
We're having a little bit of trouble hearing you guys.
Oh,
You might be far away from your mic.
oh,
There we go.
sorry. Yeah, so we had enough equity day one that we were able to get 100% financing on this one through equity and cross-collateralizing with the duplex that I own. Or actually, no, we did my Airbnb. We cross-collateralized with an Airbnb that I own. But we were able to purchase this one for $840, and we had a rehab budget of $60,000 to get it back on the market for 1.2. So we had enough equity in there that we were able to get that 100% financed, and that helped us keep capital in our pocket that we can use for the construction. And just keeping more capital in your pocket is always good in this game that we're playing. Any other?
Having some sound issues with you guys.
Sorry, what?
Having a bit of a challenge hearing you.
Oh man. Uh, I don't know.
It sounds better when you
Guys,
lean in. So I think it's just the distance
Is
or the
it? Okay.
proximity.
Yeah, can you hear me now?
Perfect.
yes, wonderful.
Okay. We're on the laptop and the laptop was closed, so I think maybe the mic's inside. So but what do you want me to go back over?
Take it from the top, guys.
Sorry, guys. Jeez. Okay. Okay, so yeah, we found this one off market from a wholesaler. There was an assignment fee included, 40,000. So our total purchase price was 840, including the assignment fee, which Flynn was able to finance for us. We used another asset that I own to cross-collateralize and get into this project with 100% financing. So yeah, we only had to come to the table with I think 20,000 in cash in terms of closing costs. And that allowed us to keep more in our pocket to use for the rehab, and then just keeping more cash in your pocket is a good thing for what we're doing. So
Absolutely. I think one thing I wanted to call out for folks is that since you guys were new clients of ours and you're obviously partnered together, you've done how many, at least one or two other deals together before, is that right? Like you had just
yeah,
finished a
together as a team,
flip?
we did one other flip in Arlington that we had just closed. Yeah, like a month before we were purchasing this one. So
And so when they came to us, they wanted us to be able to put up one of their rentals as collateral. And since, and this is for other investors of you out there that are looking to partner up, sometimes partnerships go sideways. And for us, we wanted to really make sure that since they didn't have a huge history behind them, that there was parity in their joint venture. And so my ask was that each one of them put up a rental as collateral. It wasn't necessarily that I needed that. There was some walk-in equity, and the other rental had a fair amount of equity into it as well. But I wanted each one of them to have some skin in the game. And they were both really amenable to that, just because you really never know what's going to happen on a partnership. And I appreciated that the two of you were willing to, meet our request to have each of you put one up. So we had 3 properties in total cross-collateralized for this purchase. And additionally, you guys were also open to some additional feedback as well. You were working with a very reputable wholesaler who had really spun this as a duplex turned into a triplex play, either to buy and hold or to flip. And so that's what you originally came to me for. And just given the state of 2024, as we, the extra effort it would require to build out a third unit, to have it sub-metered, all of the extra time, money that would go into this. And we're leading into yet another election year. And we kind of saw this in the past, like in 2018, at least in the Washington market, where right before the midterm elections, the market sort of softened. And I didn't want to see that happen with you guys. You were in a great neighborhood. Actually found out you had some really killer views from that upper unit. They were more amazing than we actually thought that they were. And so you could really market this as either a duplex. I think it was previously utilized as a short-term rental upstairs, or it could be listed as an opportunity for a small family to move into and then offset some of their income by, renting out the upstairs unit or vice versa. So we talked through the mechanics and the project financials of what it might look like if they just kept it 2 units and got rid of all that extra electrical and plumbing work that they might have had to do, and get it on the market as quickly as possible. So you guys turned this around in 60 days. You were very amenable to our feedback. And so it looks gorgeous. And we're really excited to see that project come to fruition here.
yeah, we were able to, like you said, turn it around in 60 days. I think maybe even slightly less than that on the rehab. It was a pretty extensive rehab, but we had our project management skills polished up for this one, and we really knocked it out. And so we're back on the market and looking to, I think we'll be under contract here pretty soon. So.
Fantastic. Yeah, I mean, I saw on your Facebook stories, you guys were demoing literally hours after you closed, so you don't waste any time. The time was of the essence and you got it done. If there are any questions on any of the 4 deals, again, you can send them in chat or raise your hand. Thank you so much, Derrick and Dexter. We look forward to hearing about your next project and seeing if we can't help you fund that one too.
Yeah, absolutely.
Awesome. Thank you.
Keep shooting them your way.
Awesome. Thanks. So how do these guys get it done? 4 seconds and cross collateralizations. What we're really looking for is the kind of equity that you have in your existing schedule of real estate. So if you do have an existing rental or investment property or portfolio you would like us to take a look at, you can actually go to our website at flynnfamilylending.com. And if you go to the borrower tab, under required documents, I'm not sure why, but it doesn't look like a hyperlink right now, but there's a hyperlink for schedule of real estate and there's a template there. Or if you already have one of your own, you can work with me to see what we could potentially do for you with your existing schedule of real estate. But again, we're looking for the total equity. Even if we're coming in second lien position, this is actually a schedule of real estate that we looked at for a client a few years back. And it allows us to be able to selectively pick the right properties to cross collateralize. And it can give us, an idea to be able to tell you what's the size or the range of the project that you should be looking for, based on the amount of equity that you have and what we might feel comfortable in lending on. So if you want a free schedule of real estate review, hit up me and we can help take a look at that for you. And again, it's at flynnfamilylending.com. You can apply on our website. You can hear a little bit more about our core capabilities on that website as well. But under that borrower section here, or the borrow section, is where you can find that free schedule of real estate template for us. And so some of you might want to be able to go back and make sure you have Nee's contact information on there. So go ahead and take a screenshot of that so you have it. But we can open it up to the floor if any of you have questions for me or Nee or the rest of our speakers. I can, now's the time. So one question that came in was, will we use primary residence to cross collateralize? We used to be able to, but unfortunately that there's some regulatory issues and some homestead exemptions that make it difficult for us to. So right now we are not doing primary residences, unfortunately. Any other questions? All right, if there are no further questions, we'll have one more. Would my partner and I each fill out the borrower sheet? Yes, I think that it's probably good to have your own, or if you share a number of properties together, then I would do it that way as well. The schedule of real estate actually has 2 tabs. The first tab is for your current real estate owned. And then the second is if you do flips or you do wholesale and you're making some profits that way, then that's the second tab for your project experience would be a way for you to share with us some of the past projects that you've owned or wholesaled so that we can get a better sense of your experience levels too. Any other questions? Nee, do you have anything to add before we close it out?
No, I mean, not the moment. In my head, I'm always thinking about lease options. And I know we're doing some creative stuff there as well, where, when it comes time to redeem those lease options, especially if there's a lot of walk-in equity with those, we can usually finance that 100%. So you can just do a rate and term refinance right away. I know, but people have been asking for that all the time.
Oh, great point. Absolutely. All right. Well, with that, then we will conclude. Thank you all for participating with us. We really appreciate your time and we look forward to hearing from you. Thank you so much.